Folks, there's a stock out there that has heavy insider buying right now that I'm also buying. And we're going to talk about insider buying today. I'm going to share the stock with you. I'm going to share the moves that the insiders are making in regards to this company here today. And by the way, it's not Affirm. Affirm, we got to talk about this situation because this is wild stuff that happened here today with Affirm stock. And if you're up and up on this, all I can say is good job for you. You're really tied in with what's going on in the markets because this was huge news. At least to me, like what happened here in this situation, this could happen with other public companies in the future. And if you want to talk about something messing up the markets, oh my gosh, could this potentially mess up the markets? And thinking from the respect of like people that are playing options and things like that, oh my gosh, okay, that was a disaster. But anyways, before we get into all that, Moomoo, if you want some free stocks, check out Moomoo. I'll have that linked as probably the pinned comment down there. Basically, they got a deal right now. 5 free stocks valued up to $3,500 each right now for signing up for using Moomoo. And also, we got the massive V-Day sale going on right now for the private stock group Financial Fortress. If you're looking to access that deal before it ends, check out pinned comment down there. All right, guys, so Affirm's what I want to talk about first here. First off, if you're looking at this, you're like, what the heck? 21% today? The earnings didn't even come out today, right? They were supposed to come out after the bell, right? And then you're looking and you're like, wait a minute, it's only down 3% after hours. What happened here with Affirm? This stock had a wild day. It hit it all the way up to $83 and some change today, all the way down to $50 at the lows today. And by the way, this stock's one of many stocks in the market that has been absolutely decimated recently. From $176 52-week high to $46 at the lows, right? It's been devastated. Volume went insane on the stock here today. 83 million, almost 84 million shares traded hands when the usual volume is like 11 million or so. Insanity. And the market cap on this company has come dramatically down. When this stock was peaking, I think it was like a $50+ billion market cap. Here today, 16 billion, and based upon that after hours move, it'll be 15 and some change likely tomorrow. Yeah, so it's been rough. And look at that. Like right there, toward the end of the trading day, last hour or two, all of a sudden the stock just literally just fell off a cliff. What happened here essentially? Well, this happened. Look at this. So what you're looking at here is essentially is a tweet, okay? This was a tweet that Affirm, somebody that runs the social media department at Affirm, accidentally sent out, okay? Says another great quarter is in the books as we accelerated our growth. Leveraging our superior technology and putting people first equals increasing total number of transactions by 218%, active consumers by 150%, GMV by 115%, and revenue by 77%. Tune into our conference call. So there was a few people that like picked up on this, and some people started trading this essentially, right? And people got really, really excited. I'm like, oh man, that was kind of all we had for numbers at that point in time. Now, in regards to revenue growth estimates, Affirm was supposed to have about 61% revenue growth. And so when all of a sudden you saw that top line number of 77% growth, it's like, oh my gosh, this is a stock ready to fly to the moon. And so what people ended up doing, they started flooding into the stock, pushed up the stock price, those sorts of things, right? And then Affirm decides about an hour or so before the trading day ended to say, okay, we already slipped these numbers out. Let's just release all the numbers now. And oh, did they release all the numbers, right? Affirm then accelerated the release of its full results, which showed the revenue jumped 77% to $361 million, which is awesome. That's a huge beat. $329 million was expected. So they came in with $361. Great numbers from Affirm as far as revenue, but that's where the great news ended as far as revenue and EPS went, because EPS, the loss was 57 cents and the loss expected was supposed to be 32 cents. So we're talking about a very nice beat on revenue and a disastrous miss on EPS essentially. And people are looking at this and like, and next thing you know, when those numbers came out, the stock just tanked through the floor, okay? The stock talked, okay? Stock talked and it talked negative and it just went through the floor essentially. And investors decided to pile out of that one like it was nobody's business. And on a day, think about today, like it couldn't have come out on a worse day when there's already a lot of fear in the market. You had CPI that was a pretty bad miss there. You had the Fed come out and basically say they're going to be way more aggressive than a lot of folks were anticipating. It was not a good day to accidentally have your social media department leak numbers during the middle of the trading day and then come in with a massive miss. people wanted to give TTCF management team a lot of crap for the last quarter. They had to, postpone the earnings call, right? Yeah, that was no fun. But I can tell you, this is a whole different situation. Affirm's a big company too. When you talk about you leaked numbers and then you got to accelerate your leak essentially on the worst day possible. I mean, that's rough. Okay, and so nonetheless, that stock sold off hard. Now, by the way, in regards to Affirm, I'm sure this is a stock that some people are looking into now, right? They're considering it. So just so you understand kind of how Affirm works, Affirm is a fintech company that issues point-of-sale loans to consumers. It works together with merchants such as Walmart, Shopify, Amazon, others, to over loans ranging from 3 to 36 months. Customers directly transact with Affirm via the company's website or one of its mobile apps. Affirm makes money through the interest that customers pay on the loan. The company's average APR is 18%. Merchants, furthermore, pay Affirm a percentage fee for the product's sales in exchange for managing the payment and taking on the risk of default, which is obviously a big risk you're taking on if somebody wants to go buy a Peloton bike, which no one buys Peloton bikes nowadays. But if somebody wanted to buy a Peloton bike, right, and use Affirm to go in and you do that transaction, they could do that, right? And then all of a sudden, they don't have the money to pay for that, and they end up not paying Affirm, and Affirm has to take the hit on that in the end, right? Which is certainly no fun for them, but as long as people are paying their bills, with a business model like this, you can't deny there's going to be a lot of money to be made long-term in this. Right now, the company's spending heavily on marketing and all those sorts of things, but long-term, there could be a lot of money made here. Now, do keep in mind, Affirm is not the only game in town in this situation. And there's a lot of companies that are going to be taking this very serious in the fintech space. One being, guess who? PayPal. PayPal now has buy now, pay later, okay? And I'm sure PayPal is going to expand this quite a bit over the coming years. And so Affirm's in a good position, but they got PayPal that's a serious competitive threat to them, right? Not just that, Square made this deal, which is another fintech giant company, right? Square is, this came out last year, buying Afterpay for about $30 billion almost, right? Which was a massive, massive transaction to go through for Square. And that, by the way, Square is another stock that's been devastated. Almost everything in the fintech space has been decimated, essentially, right? And there's now a lot of deals all over the place, but nonetheless, when it comes to Affirm, if that's a stock you're thinking about, just understand they're going to be going head-to-head with Square and with PayPal. And so those are two serious companies they could go to head-to-head with, other companies that will compete in this space long-term. But those are the two most serious threats, in my opinion. PayPal and Square are no joke as holy smokers, okay? Those companies are serious companies to compete with. And so do keep in mind, if you own Affirm, there's going to be a lot of competitive pressure there over the coming years. Do keep that in mind, okay? Now, let's talk about the insider buying in the stock. Obviously, I'm buying very heavily right now, and what's going on here in this situation. So if you've never heard of insider buying, just to kind of tell you a little bit about it, tips for beating the market tend to come and go quickly, but one is held up extremely well. If executives, directors, and other inside knowledge of a public company are buying or selling shares, investors should consider doing the same. Now, in my personal opinion, never make a decision based upon if a CEO or a CFO or a director of a company is buying or selling stocks. That doesn't mean like, they bought, I have to buy as well. Or, shoot, the CEO sold some shares, I better sell his stock. It means the bad stock. It doesn't not mean that, just so you guys understand. But it is usually kind of a bullish indicator if somebody's buying stocks. Peter Lynch, one of the greatest investors of all time, was noted as saying, quote, "Insiders might sell their shares for any number of reasons," which is absolutely true. There could be a million reasons, a CEO or an insider, a director, a high-ranking executive sells shares. Maybe they want to go buy a boat. They want to go buy a new house. They got tax payments to make. They got a divorce. Like, who knows? There's a million different reasons why somebody could sell shares of a stock, essentially, that's an insider, right? But they buy them for only one reason, that they think the price will rise. And that's 100% the truth. There can be a million reasons why somebody sells a stock if they're an insider company, but there's only one reason they go out there and they buy shares of a stock. And that's because they believe that baby's going to move up over the coming months or coming years. And usually if you're an insider company, you're usually looking at years out. And think about it from this context, right? These are people that are running this business. They get to see the numbers coming in on a daily basis. They get to see everything that's going on. They know exactly what the future is. They know the future products and services and all those sorts of things. They model the future revenues and the net income. They understand where the company's trading at. And so usually if you see insiders buying, it's bullish for your company. Let's just put it that way, okay? Now, there's a great, this might not be the only website, but I did see this, gurufocus.com. They basically, you can track like all the insider buys and sells that are going on in different stocks out there. So I did come across this one. It's pretty cool. There might be other websites and services out there that can let you see all the buys and sells like this. And let me know in the comment section if you guys have anything better than this for tracking buys and sells of different stocks and things like that. I would love to hear from you guys in that comment section. I know a lot of you guys know of other cool websites and things like that where you can see this sort of activity, okay? So it is something interesting, right? Well, here we go with this company, right? One sell from this Alford Peggy, essentially, they're an officer, EVP, Global Sales. They had a sale of 4,245 shares, and this is, like recent stuff that's gone on in the past week or so. 4,200 shares there they had sold for about $500,000, okay? So that's the only sell. Meanwhile, the CEO of this company bought 7,694 shares, which is almost $1 million worth, and then you tag on another 300 shares they bought at 125.18, and basically you're at roughly, almost right around 8,000 shares and right around $1 million worth of stocks this CEO of this company bought. Then you got a director that said, I see a deal as well. I'm going to buy 4,000 shares, and basically on the 4th of February, they bought 4,000 shares, $124.85 there for about $500,000, right? And then another director decided on the 8th of February saying, you know what? I see a deal as well. I'm going to buy also. And they bought a pretty good amount of shares, 8,400 shares they bought at $119.33. And they paid just over $1 million for those overall shares. And now that individual, that director, that David Dorman, is now up to 53,880 shares. The CEO of the company, of this particular company, is now up to 196,544 shares. Man, I wish I owned as many shares in this company as this individual owns. Oh my gosh, okay? So, what company is this, you might ask, okay? And how much of this company am I planning to buy personally? Well, I'll share that as well. This company is PayPal. Yes, that is the CEO of PayPal that's out there buying roughly $1 million worth of stock on its big dip here. And then a major director of the company buying another $1 million or so worth of the stock on this major dip. So clearly the directors and the CEO of this company see something here, and they say, this company is trading at significant discount to where it was trading out. This was a $300 stock not that dang long ago. They see this company's trading at a significant discount. They understand where the company's trajectories are going. They see the revenue coming in constantly. They know where their business is going. They know where their guidance is. And they're looking at this and they're saying, there's only, like Peter Lynch said, there's only one reason you buy, and that's because you think you're going to make money on those shares. And so if David Schulman, the CEO, puts in $1 million, he's only putting that $1 million in because he believes it's going to probably grow to $2 million and $3 million and $4 million and $5 million over the coming years. This director that now is up to 53,880 shares, who has, I would, assume a whole bunch of inside knowledge on this company, right? He only buys $1 million of this stock if he plans on, that million becoming 2 million and 3 million and 4 million and 5 million and 10 million over time, right? There's only one reason you buy stocks if you're an insider of the company, okay? So this is very, 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 very darn interesting. Now, just recently here, I bought $100,000 plus of this stock, and I'm not done buying it. When I look at PayPal here, I see a company, by the way, the high for the stock was 310 it reached in the past 52 weeks. It will get back to 310 over time. It's going to take a while, but it will get back to 310 eventually. And when it comes to me, I'm planning on buying a whole lot more of the stock over the coming months. As long as it stays in this range of, let's say, anywhere between $100 and $150 a share, I'm going to continue to add shares aggressively over the coming, literally like months, as long as it stays in this range, essentially, right? Which, if you assume the market's going to continue to be a mess and be kind of choppy, then you should assume it will stay in the $100 to $150 range. But I'm going to keep adding shares to this one over and over and over again, because what I see here with PayPal is a rare company, right? You very rarely get these sorts of opportunities in the market. Strong revenue growth company. This is the type of company that should grow, year in and year out, 15 to 20% a year. Revenues, okay? Top line, 15 to 20% year in and year out for the next several years, okay? Very, very profitable company. You very rarely get big revenue growth companies that are also profit beasts. Also, they traded a pretty darn low forward P. It's a forward P of under 30. It's probably, based upon what I have them doing, probably really it's like a 23 forward P on this company right now, right? Strong balance sheet at this company, way more in cash and investments than they do in debts, right? Great management team that's leading this company. And so when I look at everything that's going on here, you very rarely get these sorts of opportunities in the market, very rarely. And so when you get those opportunities, you can't, be I'm not going to buy it or something like that. Like I got to take advantage of these sorts of deals. And I'm hoping this one goes lower in the short term so I can continue to acquire shares as cheaply as possible. But this is one I look at and I'm pretty darn excited. And it's great to see the insiders of this company buying as well. That definitely gives me a whole lot of comfort. I would love to hear from you guys on what your opinion is of Affirm and what's your opinion of PayPal. Love to hear from you guys in that comment section as always. Don't forget to check out Moomoo, the pinned comment down there to get your free stocks, setting up an account. And also, if you want to get in my private stock group, the Financial Fortress program, get access to the hundreds of videos and course curriculum, the Discord chat with the 6- and 7-figure members and all that stuff. Check out the deal before it ends. That will be pinned comment down there. Much love and have a great day.